Hello and welcome to my new video series on how to trade, specifically cryptocurrency. Before we get the video started, I just want to let you guys know what charting site I use, because I already know in the comments I'm going to be getting asked questions as to what charting site I use. So the one I use is a one called tradingview.com. It's completely free, although you can upgrade to other pro memberships. But for the most part, most of the features are free, and it comes with a variety of tools. And that's the main problem with using the charts on other exchanges, is that they're very limited, and they don't have a large selection of tools to help you come to good decisions. So to use it, you can just search up whatever coin you want in the sidebar, and when you're ready, you just click on chart. It's very simple to use, and when you first sign in, you might see a lot more like tools cluttering the screen because it's your first time signing in. So to get rid of them, you just have to right click on the tool and then you click remove, and that should get rid of most of the stuff cluttering the screen. Alright, now let's get to the rest of the video. The first part we're going to look at today is how to read candlesticks. It's an important part of trading, and believe it or not, some people don't know how to do it. If you're one of the people that already know how to do this, you can move on to the next video where I will cover more advanced topics. Okay, so to begin, we will go over what the skinny little lines sticking out of the colored boxes mean. I'm going to highlight them in a purple line so that you can see them better. First, the lines that stick out of the top are called the upper shadows, or top wicks. The bottom ones are called the lower shadows, or bottom wicks. Every candle, well, most candles have them, unless the closing price was the same as either the top wick or the bottom wick. They basically just measure what the highest price was during that period, the period that the candle was made in. I'll just delete these really quick, and then we can move on to our next topic. What do the colored boxes called the candle body represent? Alright, now I'm just going to go grab the arrow tool from the sidebar so that I can visually show you what I mean. Now these, the candle bodies, they represent different things based on their color. And now depending on what graph you use, the candles might be black and white, red and blue, but they all show the same thing. If it's, in this example, if it's a green candle, that just means that the price closed higher than it opened in the period that you're analyzing. That means that the price opened here, where the arrow is pointing. That's where the price started. And because it's green, this is where it closed, right at the top. That's why it's green, because it closed higher than it opened. And then for the red candles, the opposite is true. For the red candles, it would have opened there, and then because it's red, that means the price closed lower than it opened, so it would have closed right there, which would have resulted in a loss. Once you understand this, it becomes incredibly easy to just look at a chart and just know what you're looking at. That's important because as a trader, you need to know when to buy and when to sell. You need to be able to make informed decisions. Now let's go back to the shadows for a second. The shadows are useful in analyzing market sentiment to see whether the bulls who think the price is going to go up are winning, or whether the bears who think the price are going to go down are winning. I'll explain this more in a later video. The tip of the top shadow marks the highest price that the coin reached during the candle's period, which I'm going to mark with a horizontal line in just a second. The same is true with the lower shadow. The tip of the lower shadow represents the lowest price that the candle reached during its period. And now the space between the tips of the shadows and the close and open prices are also very important, because they kind of like reflect how the market is feeling, which again I'll go over in a later video. Now you may be wondering, what period should I use? Well, that really just depends on the type of trader you want to be. A longer term trader would use the 1 week, the 1 day, or the 1 month, and then a scalper would use the 1, 2, 3, and 5 minute charts. Usually when the period is smaller, the candles might look a bit weird, but that's just because the coin is probably really volatile. So a lot of maybe like the close from one candle might not match the open of the next candle, but they still read the same. There's no difference because the basic rules still apply to them. And I don't recommend just using one view. I recommend using different periods to trade. Like if you trade it on mainly the 4 hour, maybe look at the 1 day every now and then. Look at the 2 hour one, because maybe on like the 4 hour chart it might look like the coin is going up, but then you zoom out to the 1 day and you can see that it's still continuing on a downtrend. So that could help you like avoid a big loss, because even though there might be a visible trend on one period, it doesn't mean that that's the overall trend. You need to look at the bigger picture sometimes. And yeah, that's basically lesson 1 of learning how to trade. It's just knowing what you're looking at, being able to analyze the basics of a chart. If you can't do that, then you're kind of overlooking step 1, which is, it won't end well for you. In the next video, we're going to discuss how to create a plan or a strategy that you're going to use to determine when to buy into a coin and when to sell. If this video was helpful to you, like, subscribe, and share so that we can spread the knowledge. See you next time.